Hello, this is Chuck Williams with FinSpire, and I'm joined today by our Chief Investment Officer, Chris Karam. Given the recent economic, market, and political developments over the last couple of weeks, we thought it would be helpful to provide a brief recap of what has transpired and an overview of what's ahead. So with that, Chris, can you provide some context on the increased stock market volatility the last couple of weeks?
Yeah, sure thing, Chuck. And to say this has been a particularly unusual general election political year is perhaps the world's greatest understatement. But due to the mixture of issues impacting markets. So yes, markets ordinarily like to handicap which presidential candidate will win the election or if the incumbent will win re-election. But markets were particularly directionally challenged the last 60 days. Because the election uncertainty was somewhat overshadowed by the anticipation of a fourth round of congressional stimulus as it relates to COVID-19. And that stimulus is talked about in the multitude of trillions. And anytime you throw around trillions of dollars, it can overshadow the impact that a presidential election can have on the markets. So this wicked combination of political uncertainty, massive government spending, and a volatile earnings season, which really is what controls and drives markets over the long term, has led to the wild ride we've been on the last couple of weeks.
Great, thanks. And can you talk about the markets and how they've been reacting to election results?
So the very near term, just going back to last Monday, November 2nd, the day before the general election, markets zoomed sharply higher in anticipation that at least an election outcome was on the horizon. Little did we know, it became clearer, then it became cloudier after election day about who the eventual winner would be. So despite the election still being contested, although being declared, the next president will be dealing with a very balanced Congress, with Democrats maintaining a slim majority in the House of Representatives and Republicans maintaining a slim majority in the United States Senate. And in short, markets appreciate that type of scenario, regardless of who the victor is in the presidential race, because they know that sweeping legislation surrounding things like tax rates, for example, is not likely in that scenario. However, the split Congress may lead to government spending deals surrounding things like COVID-19 relief and infrastructure. You're going to hear a lot about infrastructure as well as the COVID-19 stimulus moving forward. All in all, year to date, with the recent zoom higher in equity prices, global equity prices, we see, for example, the S&P 500 up almost, actually over 10% when you include dividends year to date.
Great, thanks, Chris. Something overshadowed a little bit has been the bond markets. Can you talk about what's happened with the bond markets, particularly in the last couple of weeks?
Yeah, volatility is not limited to the equity markets. Bond yields have been all over the place since the quarter ended September 30th. We began the quarter with a 10-year Treasury yield at 0.69%. It spiked higher as recently to 0.9% and settled at 0.82% on Friday's close. And bond yields have been really volatile because they're trying to balance the forecast of future economic growth. And economic growth, third quarter economic growth, of course, came in very strongly after a very poor second quarter showing. But it's also dealing with this change in monetary policy. The Federal Reserve has indicated that they will let inflation run higher in order to preserve and sustain this economic recovery that we're currently experiencing. And they're going to allow inflation to run above its target rate. So bond yields have been a balancing act of all these different areas. And you can throw massive government spending and massive government deficits into the mix as well. And suddenly you've got a very volatile interest rate and bond market.
Great, thanks, Chris. So given that background, what should we be looking at going forward through the remainder of 2020?
Yeah, just wake up tomorrow and see what the year has in store for us, right? We have to take one day at a time these days. Twists and turns likely to continue. First and foremost, the political season's not over. So what we found out with, as the votes were counted, especially in the state of Georgia, two Senate races, both Senate races in Georgia, it's a very unusual situation. are both up for grabs in a December runoff election. So that will determine the balance of power in the United States Senate. And right now, it's projected that Republicans will hold 50 seats in the Senate, could go to 52 with 2 seats in Georgia. It could also remain at 50. And a 50-50 Senate actually puts the legislative control with the Democrats in the Senate, because a Vice President-elect Kamala Harris would actually be the tie-breaking vote in the US Senate. So that could actually pave the way for sweeping legislation, potentially, surrounding tax laws, the size of the COVID-19 stimulus package, issues like healthcare, immigration, other policies that are high on the Democrat priority list. So a 50-50 Senate would add a little bit of a wrench potentially, and create this element of potential single party rule. So the political season is not over yet. So that's what we should be looking for in 2020. Income tax rates are going to be a particularly interesting conversation regardless, but more likely to occur in a 50-50 balanced Senate. The economy. Let's talk about the economy. The economy is improving overall, but weaknesses remain in certain sectors. So we're on the heels of a third quarter GDP growth figure of 33.1% positive, after a second quarter of negative 31.4%. The fourth quarter is currently estimated around 3.5% of positive growth by the Atlanta Federal Reserve. So we see strong manufacturing activity and a healthy consumer driving economic output via retail sales, new and existing home sales, and auto sales. And that should put us in a position for a good start to 2021 economically. And lastly, I'd look for a continued strength in the labor market. Amidst all the political coverage this past week, the monthly labor market report was released by the Bureau of Labor Statistics and showed another significant improvement, with the unemployment rate falling from 7.9% to 6.9%. We're hoping for further progress in the December report, but most importantly, we should hope for at least one COVID-19 vaccine to obtain FDA approval. And this would greatly help the economy by improving confidence and restoring our everyday way of life that we had pre-COVID.
Great, thanks, Chris. To let everybody know, on Tuesday, December 8th at noon Central Standard Time, we'll be having a more detailed economic and market update and discussion with portfolio manager and a portfolio strategist from Natixis. So Chris, want to tell us a little bit what topics we'll be covering on that discussion?
Yeah, that's right, Chuck. So Natixis Asset Managers has assembled a really impressive deck of economic activity post the COVID-19 crisis. Really get into and dissecting the things that we do in our daily lives and tracking them on a daily, weekly, and monthly basis. And during that call on December 8th, we're going to dive into the status of our economic recovery, the health of the consumer, the labor market, the status of the COVID-19 vaccines, and all the different pharmaceutical companies and drug companies that have been involved in the development of a COVID-19 vaccine. And we'll finish, of course, with forward-looking market insights, as we always do. So look for the registration link and information for this call in the description and comments below. And we certainly look forward to reconnecting very soon on that.
Great. Thank you very much, Chris. Wish everybody a good rest of the month, the rest of the year, and we'll be talking to you very soon. If you have questions, again, feel free to reach out to Chris or I. Thank you.